Very good evening to all of you. On behalf of Auditing and Assurance Standard Board of Institute of Chartered Accountant of India, I welcome you all in today's 123rd CP program organized by AASB of ICI for this council year. As you all are unaware that AASB is organizing various webinars on sector-specific webinars, and we have covered most of the sectors previously during our previous webinars. And today we are going to cover very important sector, that is the manufacturing sector. And in order to tackle this very important sector, we are having with us two eminent speakers from our Chartered Accountant fraternity, Madam Gitika Ladha ji, CA Kirti Ladha ji, and CA Mukul Bindal ji. So on behalf of Auditing and Assurance Standard Board, I extend my heartiest welcome to both the learned speaker, Madam Kirti ji and Mukul Bindal ji. Welcome to both the learned speaker. We are also having two young moderators, CA Lakshya Joshi ji and CA Saurabh Lakhera ji. So on behalf of AASB of ICI, I extend my heartiest welcome to both these moderators, Lakshya ji and Saurabh ji also. So Honorable Chairman Sir and Honorable Vice Chairman Sir are both stuck up in another meeting. So I'm taking this liberty to start today's webinar. So before wasting much more time, I request CA Lakshya Joshi ji to please start the proceedings of the webinar. Over to you, Lakshya ji, please.
Thank you so much, sir, for providing me with this opportunity. First of all, I would like to thank Chairman Sir and Vice Chairman Sir, AASB ICI, for providing us with the opportunity to moderate in this 123rd CPE program for this council year. So as we are going to learn about the key consideration in the audit of manufacturing sector, so I'll just want to brief about how the audit of manufacturing sector is taking place and why this is so crucial. Because the manufacturing sector is the cornerstone of the global economy. And in India also, as we are shaping up, we are working towards the developed economy. So the manufacturing sector is taking the first wheel in this process. And the audit of manufacturing sector is very complex. The complexity which makes this the extensive supply chains, complex processes, diverse product lines, the inherent risk involved in this, in the manufacturing businesses, and other few important areas such as inventory, production cost, uses of intellectual property by the manufacturers, and lastly, value and volume of the transactions involved in the manufacturing sectors, manufacturing companies. So to speak, we have two learned guests. I would like to welcome CA Kirti Ladha ji and CA Mukul Bindal ji. I would like to introduce CA Kirti Ladha ji. So she is a chartered accountant with around 9 years of experience in stat audit. Kirti ji specializes in ensuring financial accuracy and compliances. Currently, she is working with one of the MNCs where she is managing real estate and commercial clients based out of across the geographies. Throughout her professional journey, Kirti has had the opportunity to work with clients from various sectors, including real estate, commercial, employee benefits, and specifically the manufacturing industry. So thank you so much, Kirti ji, for joining us. I would invite Saurabh ji to introduce Mukul ji and proceed further.
Thank you, Laksh. Thank you. I would also like to thank our Audit and Accounting Standard Board, Vice Chairman and Chairman and Vice Chairman, and also the convener of the meeting. Further, I am also going to introduce our esteemed guest. It's my pleasure to introduce my esteemed guest, CA Mukul Bindal ji. With over 13 years of extensive audit experience, primarily in power sector and diversified experience in oil and gas, financial services, manufacturing, retail. Mukul is a highly accomplished chartered accountant and a Bachelor of Commerce honors graduate. Currently is associated with the reputed international organization in their audit department. Mukul has established himself as a distinguished guest speaker, sharing his insights and expertise in various ICI session events earlier. Please join me in welcoming Sri Mukul Bindal ji. Thank you.
Thank you, AASB team, and thank you both of you for such kind words and a warm welcome. So I'll first share my slide. I have prepared one slide for discussion on the manufacturing sector. Let me know once it is visible. Is it
Yes, we
visible?
can. Yeah, we
Yes,
can
sir.
see it.
Okay, thank you. So to start with, the topic is key considerations in an audit of manufacturing sector. So before understanding the audit of manufacturing sector, let's first understand what the audit is. For that, we just need to understand what are the steps involved in audit. So as per the professional auditing standards, there are three steps which are involved in auditing. One is audit planning, risk assessment and evaluation. Then second is audit execution, identification of gaps. Then third is audit conclusion and reporting. I'll be discussing about these steps throughout when discussing about the manufacturing sector. But if we want to understand what are these three steps, let's take an overview. In the audit planning, risk assessment and evaluation, we identify what are the financial captions we are going to audit, what are the risk involved in that financial captions, and we evaluate, and based on that we formulate our audit plan, audit strategy, audit procedures. Then in the second step, we execute those procedures which we have formulated as a part of our audit strategy. Then based on that, if we identify any observations, based on those observations and based on the evidences which we have obtained, we formulate our audit conclusion and we issue an audit report. Now, if I want to link this audit process with the manufacturing sector, so before that, let's understand what manufacturing sector is. In India, as well as in the entire world, manufacturing sector is a wide domain because it consists of various industries, various companies. For example, the FMCG companies, for example, Britannia, Hindustan Unilever, they manufacture the goods which are directly consumed by the ultimate consumers. Then auto sector, which the classic example is Maruti, which manufactures the vehicles. Then steel manufacturing companies, etc. So what I'm trying to say, manufacturing sector is a wide domain. It consists of many variety of companies. So it cannot be said that one particular type of company is a manufacturing sector. It can be of any type. And if I talk about its overall contribution to Indian GDP, it's almost 13%, which is a very significant number. And it's only 3% short of the global average. Because globally, it's considered to be a 16 to 17% contribution to any economic GDP contribution. So it's a very big number. Now, when we are talking about the manufacturing sector, so there are few things which come to my mind that are important, and that is something which every auditor will face and will have to audit. First one is inventory. So we'll be discussing in detail about inventory, what is the process understanding. Then in inventory, there are two things which are important, which is the quantity and the price. So for quantity, we'll be checking the existence where assertion. Then in terms of price, it is the valuation. Then related to the inventory, there is another account caption, which is the cost of goods sold. So for the cost of goods sold, again, we need to understand the process. Then we need to understand what is bill of material. Then what are the analytical procedures which can be performed. Then there is another key area, which is PP. So PP is a wide area, so I'll be more focusing on the impairment of PP. Then the key reporting requirements for the auditor related to the manufacturing sector, it can be the SA 701 key audit matters. Then there can be reportings related to the CARO, which are required by the auditor. Then there are certain other areas which I'll not be covering in my session here, which is related to the revenue going concern, deferred tax. Then there are certain estimates, which I feel, and I believe that they are the key focus areas for the manufacturing sector. So to start with the inventory. So when we talk about inventory, I believe it is considered to be a key focus area for manufacturing sector. it is not only a financial statement line item, it is the key business process. When I say it is a key business process, I would say it is the bread and butter of this sector, because ultimately manufacturing companies, what they do, they manufacture the inventory, then they purchase the raw material, they manufacture the inventory, they sell it, and they earn the revenue. So it is the biggest and the key focus area for manufacturing sector for an auditor. Now, what an auditor should do for audit of the inventory? He needs to understand what are the risks which are involved in the inventory and what are the controls which management has placed for such risk. Why is it important for the auditor to understand the risk for inventory process? I would say there are two things. First, it is the management's responsibility to identify the risk and place the controls for those risks. And when auditor understands those risks and the controls, based on that, he develops a level of comfort. And based on that level of comfort, he decides what would be the nature, timing, and extent of his substantive audit procedures. Let's take an example. The example is there is a transaction where the entity purchases the raw material, and there is a risk that goods are not physically received. So the control here can be, there is either a security guard or a store manager who records the physical receipt of the goods. Then taking situation one, where management control, the control is where there is a recording of the physical receipt of the goods, where this management control is designed and operating effectively. In that case, the auditor will have a good level of comfort, and based on that comfort, he'll decide to perform less substantive procedures. So the nature, timing, and extent of his procedures would be less as compared to this situation too, where the management control is designed, but it is not operating effectively. So against this risk, the management control is not operating effectively. In that case, the auditor will have a less comfort, and then he'll decide to perform more substantive procedures. The nature, timing, and extent of the procedures would be significant. Now, as I said, for an inventory, there are two things. So for any inventory balance which is recorded in the financial statement, there are two key things which are important. One is the quantity and second is the price, which are used to make that number which is reported in the financial statements. Now, related to the quantity, there is an assertion which is called existence. And related to the price, there is an assertion which is called valuation. Now we'll discuss in detail about this existence as well as valuation. Yeah. So talking about the existence, I have put the process which an auditor should follow in a flowchart format, which is this way it would be very easy to understand what procedures and what process an auditor should follow. Just give me a second. Yeah. So as we discussed previously, it is the management responsibility to ensure the accuracy, to identify the risk and to make the controls against those risks. So again, with respect to the existence, it is the management responsibility to ensure the accuracy of the quantities for the inventory which is recorded in the financial statements. Now, for that, they may form various controls, and the most common control is physical verification of and physical count procedures for that inventory. Now, that physical count procedures can be complete count as well as a cyclical count. Now, what an auditor should do, he will, the most common procedure, what auditor performs is observing that physical count which is performed by the management, and it can be virtual or in person. So what auditor will do? Auditor will accompany management to the inventory site, and he'll observe the physical count procedures which are performed by the management. And then based on that, he'll form his comfort and then will decide this further procedures. For performing this procedure, what auditor should do? The auditor first needs to understand what is there in as the inventory balance, what is it consists of, what is the kind of inventory management has, the company has. And after the understanding only, he'll be able to decide whether there is a risk of material misstatement in that particular balance and what further procedure he needs to perform. So he'll decide based on his risk assessment whether he needs to attend that physical count or not. Now, what kind of inventories can there be? So, in practice, there are generally three kinds of inventory. It can be raw material, it can be finished goods, it can be work in progress. For raw material and finished goods, the auditor will determine whether there is a risk of material misstatement. Let's take an example of a company called Britannia, and in that the finished goods is basically the biscuits. Now, take an example that the value of the finished goods is say 20 million, and the materiality level for an auditor is 1 million. In that, the value of each item is very insignificant, say 50 rupees or 100 rupees, which is making of 20. Now, for auditor to decide whether there is a risk of material misstatement, he'll assess that in order to have a misstatement of more than 1 million, it would require high volume of items to go wrong. So this inventory is basically low value and high volume of items. In this case, he may decide, if there are no other conditions present, he may decide that there is no risk of material misstatement, because for having an error of more than 1 million, it has to be a large volume of items. So he may decide not to have a risk of material misstatement, and thereafter he may decide not to attend a physical inventory count. On the other hand, for example, let's take an example of tractor manufacturing company. They have a finished goods in the form of tractors, and the total value of inventory, for example, say it is 20 million, and each tractor is valued for 0.1 million. Then in that case, if the materiality is 1 million, then it would require less number of items to form a material misstatement. So in this case, the auditor may decide that there is a risk of material misstatement, and in that case, he will want to perform further procedures with respect to the inventory quantity. Then the next question, he'll ask management whether management is going to perform the physical count or not, whether management has a control with respect to the existence of this inventory or not. Then if he gets the answer as yes, then he'll plan to attend that inventory count. And based on that, he'll obtain the evidences, and then he'll decide what further procedures he need to perform and what would be the reporting he'll make. In case if management doesn't have a control and they are not performing the physical inventory count, then in that case, he may want to perform the alternate procedures. And the alternate procedure is he may want to perform the independent inventory count on his own. And similarly, he may decide what would be the reporting he'll include in his audit report. So now discussing about the third type of inventory, which is the work in progress. Now for work in progress, it becomes difficult for auditor sometimes to determine what is the quantity, whether that inventory is of the same quantity which is recorded in the books of accounts. So for that, auditor will understand how the management is identifying the quantity, and based on his understanding of that process, he will formulate his procedures, and then he'll complete his inventory count procedures. Now, related to the existence and inventory count only, there are certain other considerations also. For example, when the inventory count should be performed. So it is generally preferred that inventory count is performed at a year and it can be 30th September, 31st December, 31st March, 30th June, based on the year end of that particular entity. Now, why inventory count should not be performed at other date? It can be performed at the other date in certain circumstances. For example, where the inventory balance is so huge, it's so voluminous that it is difficult to perform the inventory count at a year end, because there is a chance that the entire count will not be completed by the time the books are closed. So in such cases, inventory count is performed either prior to year end or after the year end. And in this situation, there is a very important procedure which management performs, and then auditor performs his audit procedures on that. So what management does is they prepare a rollback or a roll forward. For example, if the year end is 31st March and the inventory count is performed on 15th March, then there would be a roll forward which would become very important, and that is something which management will prepare. So what is roll forward? So in our example, the inventory count is performed on 15th March, then they will prepare the list of movements inwards, outward, from 15th March till 31st of March. And then auditor will perform a test check and will decide what procedures he wants to perform, and then he'll test the samples against these invoices or supporting documents to confirm that yes, the on the date of inventory count, the inventory was present, and thereafter there has been movement which is confirmed by other supporting evidences. Now, there are certain common challenges which an auditor faces with respect to the inventory count. The common example is the inventory cannot be counted in number of pieces. For example, in case of a chemical industry, where the chemicals are stored in large bins, and it is difficult to measure what would be the quantity upfront, and there are certain other measures which management has in place, which enables the auditor, which enables the management to measure the quantity, and thereby enables the auditor as well to observe, yes, that the quantity is uh, accurate or not. Then another example is where the uh, auditor faces challenge where management using IT technology. So in my practical experience, there was a shoe retail company where their shoes were stored in a very big warehouse, and they need to complete the inventory count in a single day. So how they used to do, they used to use a scanner. So they were using a technology, and that scanner used to transfer the data directly into the system that yes, this is the actual physical inventory. So in that case, auditor may decide either to rely on that technology, or if he decides not to rely on technology, then he may perform his test counts based on his sample size. So another example is where the auditor faces a challenge where the management using as an expert for measuring the quantity of the inventory. So, for example, there is a inventory which is in WIP stage, and the accurate stage of that inventory cannot be computed without the involvement of management expert. And then management expert issues a certificate, and based on that certificate, the physical stage of that inventory is measured. Now, in that case, the auditor, as an auditor, what procedure he can perform, he'll obtain that certificate. He may assess that there is a need to involve auditor expert as well. However, in this entire process, the auditor will need to understand that involving using a management expert report as well as using an auditor expert will not make him relieved from his responsibility as an auditor. So ultimately, it would be his responsibility with respect to the audit procedures and the audit report which he'll be issuing. So this was on the inventory existence, now there are certain things, although we are all aware that how to conduct an inventory count, but again, certain key reminders which are required for inventory count. So before a count, auditor needs to understand the composition of inventory, which I discussed in the previous slide, whether it is raw material, WIP, or finished goods. Then what are the locations? Is the inventory located at various locations, or is there any kind of inventory which is located at the third party? Then what is the coverage which management is planning to take? Then what are the instructions which are issued by the management for their staff to conduct the inventory count? Whether management is using any third party to conduct the inventory count. So, and during the count, he'll observe the count which management's personnel is performing, whether they are complying with the instructions which are issued. He'll also perform the test count. Then he'll ensure that person performing the count is independent. Uh, then after the count, he'll understand whether there are any variances or not. If there are any variances, then how they are dealt in the books of accounts, whether there is a need for any rollback or roll forward if the inventory count is not performed at the year end. So these are the certain key reminders to verify the existence. So this was all related to the quantity. As I said, there are two key elements. One is quantity and second is the price. Now let's understand what are the procedures which should be performed with respect to price or with respect to verification of valuation assertion. So there are 6 steps which are involved, which an auditor should perform. First is the understanding the financial reporting framework. When I say financial reporting framework, he need to understand the cost of the inventory, what should be included in the cost of inventory as per the financial reporting framework. For example, our accounting standard says the cost of the inventory should include all the cost incurred in bringing that inventory to the sellable condition. So he needs to understand, as per the relevant financial reporting framework, what should be the cost of the inventory, what should be included in the cost of the inventory. Then second is he needs to understand what is the costing method and what is the costing formula which can be used as per the financial reporting framework and which is used by the management. So when I say costing method, it means whether it is the actual costing method, standard costing method, what is the costing method which is used by the management, and what is allowed as per the financial reporting framework. Second is the costing formula. So the costing formula can be either FIFO or a weighted average. So what is allowed as per the financial reporting framework and what is used by the management. Now, in the second step, he needs to understand the entity and its environment. So when I say understanding the entity, so what is the relevant industry? What are the regulations applicable to it? Whether there are any external factors. So two examples here. When understanding the relevant industry, he needs to understand what type of cost entity incurs in manufacturing its goods and services. It can be the machine cost, it can be the warehouse cost, or it can be the uh, labor cost. So what are the costs which are involved in manufacturing that particular type of inventory, and whether there is any kind of a cost which is not allowed as per the standards to be included in the cost of the inventory. For example, there is an industry which imports its raw material from other countries, and in the import, they incur the demurrage charges. So, demurrage charges is something which is considered to be an abnormal cost, and it is not something which is allowed to be added to the cost of the inventory. So, in obtaining an understanding, the auditor needs to understand what are the costs which are incurred and what are the costs which are considered for the purpose of making the inventory cost. Second example is whether it is a seasonal industry. When I say seasonal industry, so if the season of the industry coincide with the year end of that company, then inventory will definitely be a risk of material misstatement, because during that time the inventory balance would be significant. So all these factors he needs to understand in order to decide whether there is a risk of material misstatement or not, and in order to decide what procedures he needs to perform. Second thing, he needs to understand what is the nature of inventory, nature of entity. For example, whether entity is using the IT for the purpose of valuation or not. Even in case if entity is using the IT, then auditor may decide to involve the IT audit team in order to obtain the further understanding and in order to decide whether he'll be able to rely on the IT environment for and whether he'll be able to reduce his further procedures. In case the auditor decides that he'll not be able to use the IT environment, he'll not be able to place reliance on the IT controls, then he may decide to test samples of inventory and perform the further substantive procedures and test manually whether the valuation of that inventory is correct or not. So this is another important factor for understanding what kind of risk is involved in the inventory. Then the third step is he needs to understand whether the entity complies with the financial reporting framework. So as I said, in the first step, he understands what is the financial reporting framework, what are the costs which are allowed as per financial reporting framework, what is the costing method, what is the costing formula allowed as per financial reporting framework. Then in the third step, he'll read the accounting policies of the company. He'll understand what are the costs which company is considering for the purpose of inventory, and what is the costing method which company is using, what is the costing formula which company is using, and then he'll check whether there are any deviations or not in the third step. Then in the fourth step, he'll understand whether the entity implements its accounting policies. So as a principle, he has understood that FIFO is allowed as per the accounting standards, and management's policy is using the FIFO for the purpose of inventory valuation. Now he'll perform the test check and he'll understand whether entity is actually following that accounting policy or not. So in the fourth step, this is something he needs to do, and how he'll do it. First, he'll perform the walkthrough with the management, and during the walkthrough, he'll understand what is the material cost, what are the taxes which are involved, whether there are any taxes, import taxes, custom duties, which is not something refundable later on, which is forming part of that inventory cost. He'll understand whether inventory is purchased in a different currency, so there would be an exchange reference which might get added to the inventory cost, whether there are any discounts or rebates, what are the conversion cost, what is the costing method, costing formula which management is using. So he'll perform a walkthrough to understand all these aspects related to the inventory. Then once he has performed all these four steps, he has performed the walkthrough, he has completed his understanding. Based on that, he'll decide whether there is a risk of material misstatement. How he'll decide whether there is a risk of material misstatement? He'll decide based on his materiality. So for example, I said that for example, the value of total finished goods is 20 million and the materiality is 1 million. And if there are low value, high volume items, he may decide that there is no risk of material misstatement because it would require high volume of items to go around to have a RMM. And if the situation is reversed, that there are high value, low volume items, then he'll decide that there is a risk of material misstatement. And he'll also see whether there is any history of misstatements or not. So for that, he'll look at his previous year work papers, and if it is an initial audit, then he may look at the previous year financial statements or may contact the previous auditor as well, whether there has been history of misstatements or not. And based on that, once he has identified what are the risk of material misstatements involved, he'll plan and perform his procedures related to those RMMs. Now, to summarize with respect to valuation, he'll first understand what is the type of inventory, whether it is raw material, WIP, FG. Then he'll understand what is included in the cost of inventory. It would be raw material, Then if it is RMM, then it would be a purchase cost. If it is a WIP or FG, then it would be RMM. It would be a raw material cost and the overhead cost. And what is overhead cost? Cost of conversion. So overhead can be direct or indirect, fixed or variable. For example, labor, machinery, rent, depreciation. So similar other cost. So based on his understanding, he'll understand all these aspects, and he'll also see with respect to certain other common challenges which we have discussed, whether any abnormal cost is getting added to the inventory cost or not. In my example, the demurrage cost, and uh, what are the other nature of that he'll understand. Now, in the practical life, these are the examples of certain risk or material misstatements which we identify when we audit an inventory balance with respect to quantity as well as price, and the audit procedures which we perform. So with respect to quantity, there are two kind of risk which are generally identified. One is quantity of the inventory held by the entity is not completely and accurately recorded. So the quantity which is there for the inventory which is there in the financial statement, the quantity is not accurate. So for that, the procedures which are performed is the inventory observation, the inventory count which we discussed, and the inventory, if the inventory count is not performed towards the year end, then the inventory rollback or roll forward is performed. Then there can be an inventory which is recorded at the third party location. So in certain manufacturing industries, they use the job workers. So they send the raw material to the job workers, and job workers convert that inventory into finished goods, and then they send it back. And they, as a cost, job workers charge their processing cost. So the inventory which is lying at the job worker location is the inventory of the company. So this is called an inventory which is held at third party location. It is an example. So the procedure in this case would be the third party confirmation which auditor may want to obtain if there is a risk or material misstatement. This kind of risk or material misstatement is there for that particular company. Now, related to the valuation, what are the risks which are generally identified? The first one is inventory cost formulas, which is FIFO or weighted average, are not appropriately determined or not applied consistently. So there can be a risk in the first year. The company is using a FIFO method, and later on it moved to the weighted average. However, the policy still says that it is a FIFO only. So there can be a risk that the company is not applying what is disclosed in the accounting policies. Then in that case, the best audit procedure is the auditor will take the samples from the inventory and will perform his procedures and determine, using this cost formula, he'll perform the reperformance, whether he's getting the same inventory value or not, what is disclosed in the financial statements. Then another example of risk is fixed and variable overheads related to the production or conversion are not identified or are not appropriately allocated. So as I mentioned earlier, the FG inventory cost or WIP inventory cost is the cost of raw material and the cost of conversion, and the conversion cost is basically the overhead cost, which can be fixed or variable cost. So it may be possible that the conversion cost is not properly charged or allocated on the inventory. For example, there is a machine rent cost, a machine which is taken on a rent, and it is something which should be added to the inventory cost. However, in terms of base, the most ideal base for this cost allocation would be the machine hours. However, uh, management is using a base of number of units produced. So the base which is used by management is not appropriate in this example. So there is a risk that the allocation is not happening appropriately. In that case, the auditor will look at the base of the allocation. First, he'll identify whether there is a risk or material misstatement. If there is a risk, then he will see whether the base is appropriate or not, and if not appropriate, then he'll highlight to the management and we will get it corrected. The another example is standard cost inventory variances are not accurately calculated or appropriately apportioned between the inventory and cost of goods sold. So in certain companies, what management does is they have a system which values the inventory based on the standard cost. So every year at the start of the year, they put standard cost of the inventory based on their previous experience, and inventory keeps on getting valued on the value which is there in the system. And at every period end, they measure what is the actual cost which they have incurred and what is the cost which is appearing in the system based on the standard cost, and whatever the variance is, whether that variance is on account of normal cost or abnormal cost. If it is on account of normal cost, they charge it to the inventory, and if it is on account of abnormal, they directly charge that cost to the P&L. So whether that variance has been appropriately calculated or not, and if that variance is there, whether it has been appropriately dealt with the inventory cost or not. So that is something, a kind of a risk which can be there practically. And in terms of audit procedures, the auditor may want to recalculate that variance and may want to re-review as to whether that inventory cost variance has been properly dealt in the books of accounts, whether charged to the P&L or charged to the inventory cost. The another classic example of risk is the inventory cutoff, whether inventory receipts or shipments are not recorded in the correct accounting period. So in many companies, uh, I think almost all the manufacturing companies, there are huge shipments or huge purchases which happen towards the year end. So there is always a risk that the shipment as well as purchases get recorded in the incorrect accounting period. So for that, there are cut-off procedures which auditor generally performs. So he'll take some samples of the inventory shipments before the year end as well as the after the year end, and he'll check with the relevant supporting documents whether those shipments have been correctly recorded in the respective accounting period. Then there is another example of inventory bill and hold. So for this, it is relevant for specific type of companies. So there is a risk that bill and hold transactions are not completely identified or their effects on the inventory are not completely accurately recorded. So he'll check the invoices and the terms of the contract to ensure that the recording is correct. Excuse me. Then the last one is the classification. So the risk is inventory is not appropriately classified. So it is related to the disclosure. So if any inventory is a raw material, it should be classified as a raw material. If it is a WIP, it should be WIP. If it is a finished good, it should be recorded as a finished good. So this was all about what are the general risk and the audit procedures which are performed. Now coming to the second topic, which is the cost of goods sold, which is again another significant audit area, which is related again related to the inventory only and most important in the manufacturing sector. So again, as I said, the audit process is first understanding the risk, obtaining understanding of the process, and once you have understood the risk and processes, then you identify the risk, and based on that risk, you identify what are the controls which management has. Then based on that, you develop your level of comfort, and then you decide the nature, time, and extent of your further audit procedures. Now, with respect to COGS, again, there is a need to understand the process, and within the process, the most important thing which auditor needs to understand is the bill of material. So what is bill of material? So I'll give an example of a pharmaceutical company. So they make medicines, and in order to make the medicines for any tablet which we generally consume, there is a specific formula and specific quantities of items which need to go for the purpose of manufacturing. So the common raw material which they use is the API, and which API to be used in which quantity. There is a specific bill of material which they maintain. So the auditor needs to obtain the understanding of that bill of material as to what is the quantity of raw material and which raw material is being used for the purpose of manufacturing that inventory. Then understanding of this bill of material will help him to understand whether there is increase in COGS or not. I'll give an example. So, for example, for financial year 2023, the auditor has obtained his understanding of bill of material, and he has identified that there are four raw materials which are used in same quantity of 25%, and based on that, they make the final output. Now he comes to financial year 2024. He sees that there is a significant increase in the cost of goods sold from financial year 2023 to financial year 2024. However, there is no change in the input of the raw material. There is no change in the output in terms of finished goods, and there is no change in the business operations of the company. So in this, when once he has understood the bill of material of that particular product, then he will understand there is no change in the raw material. Then he'll identify the reason of increase in cost of goods sold is basically the price of the raw material. So this understanding will help him to understand what are the reasons for the variations in the financial statements, and based on that, he'll develop some level of comfort, and then he may decide to perform less substantive procedures to identify the variance of that inventory. There are certain other procedures also which are performed for cost of goods sold in terms of analytical procedures, which is the GP margin analysis. So in certain companies where there is uh, a fixed range of margin which they generally earn. For example, the plastic box making companies, the lunch boxes, the pigeonware, Tupperware. So they generally have a margin of 60 to 70%, the gross margin. So uh, the auditor will perform that, yes, the gross margin is in line with the previous years, and based on that, he'll develop his comfort level over the COGS balance. Similar to raw material, these are the practical examples of risk of material misstatement which are there on the COGS and the audit procedures. So, for example, the first one is related to the completeness. So, since COGS is a P&L item, so practically there are in totality 7 assertions: measurement, presentation, disclosure, completeness, occurrence, valuation, existence, rights, and obligations. So, with respect to the P&L balance, it would be more on the measurement and then completeness. So these two assertions would be relevant. So with respect to the first assertion, which is the completeness, there can be addressed that COGS recorded in the income statement is accurate or doesn't inaccurate or doesn't match with the amount recorded in the trial balance. So there can be this risk. So for that, there can be substantive analytical procedure which auditor can perform. For example, the COGS reconciliation. So what he'll do, he'll perform a reconciliation of opening inventory plus purchases less closing inventory. Then the remaining balance would be COGS. So based on that, whatever the balance he derives as a COGS, he'll match what is there in the trial balance. And then if there are any variances, then he'll ask management for such variances. Then second example of risk is liability for the purchases of goods or services are recorded inappropriately when they are not accurately recorded. So when you purchase the material, then there is a liability which is recorded. So it is related to the liability part of that. And in this case, it says there is a risk that liability is not recorded. Then the audit procedure which auditor can perform is the expense vouching. Then similar to inventory cutoff, there is risk for the purchases cutoff, that the purchases which management has done towards the year end, they are not recorded in the appropriate accounting period. So again, the cutoff procedures would be performed. Then another example of risk is related to the financing element, that cost of goods and services have not been accurately adjusted for the effect of the financing. So there is a financing arrangement which company has done with the supplier, and if that financing arrangement is specific to the purchase of the inventory, then the whether that financing cost should be included in the cost of goods or not, that is something risk, and in that he can vouch for the supporting document, the supporting contracts, and he, based on the circumstances, he can decide whether the cost of that financing should be included in the cost of inventory or not. Then supplier purchase incentives. So there are certain incentives which are given to the companies, as well as company also gives certain incentives when they make the sales. So it is on the purchase side. So any incentives which it is receiving from the supplier, whether they have been appropriately accounted or not. Then offsetting of payables and receivables. So when company is making the purchases from the supplier and simultaneously it is also giving certain services or supplying goods, then whether payables and receivables should be offset or not, whether they are inappropriately offset. So there is again a risk for which the auditor may decide to perform the procedure to understand the contract and to understand whether those balances can be practically offset, whether both parties agree to that or not. So these are the common examples of risk as well as the audit procedures related to the COGS. Now, moving to the another topic, which is related to the impairment of PP. So as we all know that the manufacturing sector is a very capital intensive industry, and so as per the accounting standards, when impairment assessment is required, it is required at each reporting date when there are indicators of impairment. And in terms of indicators, it can be physical damage of that asset, it can be significant changes uh, in the extent or manner in which the asset has used. Then there can be losses within the company with respect to that CGU where that PP is particularly used. There are negative cash flows, cash losses in the company. So there can be any kind of indicators. So if there are such indicators, then what an auditor should do, he should ask management for their assessment of the impairment, because there are certain indicators of the impairment. So practical examples are that there are operating losses. So there are three CGUs XYZ, and one of the CGU is incurring the operating losses. Then the impairment assessment would be required for that particular CGU only. Second is fall in the market capitalization. So there is a listed company, and that company is entirely a one CGU. If there is a fall in the market capitalization, there is a sale. Uh, uh, Investors are taking their money back and then selling the shares of that company, then this is another indicator of the impairment. Now, in the impairment assessment, the key assumptions are generally cash flows, weighted average cost of capital, and growth rate. And what procedures an auditor should perform: for the cash flows, he can have a trend analysis. Then for weighted average cost of capital, he can compare it with the industry. Similarly, for the growth rate, he can compare with the industry, as well as he can compare with the historical trend in the previous years, what has been the actual growth in the cash flows of the company. Now, so this was on the impairment of the PP. Now, if we talk about what are the reporting requirements. So when I say reporting requirement, I think of two uh, standards. One is the key audit matters, which an auditor needs to report. So it is required for the listed companies to include a key audit matter. And what key audit matter is, where the management has used the estimations and it required a lot of audit efforts on the part of the auditor to audit that estimation, and so the efforts of the auditor were more than normal, and that then thereby that matter has become a key audit matter. So the common examples which are generally seen in the companies uh, related to the inventory valuation. So the estimation of the inventory provision and the estimation of the obsolete inventory of the management, and it required a lot of at the part of the test that judgment. So it can be an audit matter. Another example is related to the sufficiency of evidence over the existence of the inventory. So in this case, there are multiple locations of the entity across the globe, and the inventory balance is equally maintained across those locations. In this example, there were 28 manufacturing plants across 6 countries. So it was difficult for the auditor to visit all the plants and to have a coverage of all the plants, because some of the locations were in a in a slight areas as well. So in that case, since it required a lot of effort on the part of the auditor to obtain audit evidence, then that is why it became an key audit matter. So as a part of key audit matter, he needs to report why this is a key audit matter, as well as what audit procedures the auditor has performed to test that key audit matter. Related to the PP, the example is on the impairment. So there are what are the assumptions, uh, based on that assumptions, why it has been considered to be key audit matter, and what are the procedures the auditor has performed. Another reporting requirement is related to CARO. So it is the first two clauses. So the first clause talks about the property, plant, and equipment, and second clause talks about the inventory. So the first clause has 5 subparts. So in the first subpart, whether the proper accounting records are maintained. So first we need to understand CARO is a reporting of facts. So auditor is not required to pass on his judgment. What auditor needs to do is he needs to report what fact he has observed within the entity. So for example, in the first one, whether there is a proper maintenance of accounting records or not. So the auditor needs to see whether there are proper details in terms of sufficient description of the PP, classification, situation, useful life. So all these details are properly maintained in the accounting records of the company or not. So he needs to state that fact in the audit report. Then second is companies maintaining proper records showing the full details of intangible assets. Similar to the tangible, he needs to report for the intangible assets as well. Examples of intangible assets are long-term customer contracts, then broadcasting license, non-competition agreements. Then similarly, in the third one is whether property, plant, and equipment have been physically verified by management at reasonable intervals or not. So for that, what auditor needs to do, he needs to attend the physical verification conducted by the management. Then the another clause is related to the immovable properties. So whether the title deeds of immovable properties which are not held in the name of company, so whether there are any such cases. If there are such cases, then auditor needs to include all these details in his audit report, like description of property, gross carrying value, held in the name of whether it is the promoter, director. So all these details he needs to include in his CARO reporting. And the next one is whether there has been revision of, and then there is an increase, decrease if it is more than 10%. So all these details he needs to include in his audit report. Then whether there are any proceedings which have been initiated in against the company or pending against the company under the Benami Transactions Act, that is something he needs to report. Then in the second clause, it is related to the inventory. The auditor needs to disclose whether there has been any whether the physical verification has been conducted at a reasonable intervals by the management or not, and if yes, then whether there was any discrepancies. If discrepancies were more than 10% or less than 10%, that is something he needs to report. And within second clause, there is a subclause 2B, where he needs to report whether there has been any working capital loans which have been sanctioned more than 5 crores. And for that, the securities, current assets, primarily, generally, companies give their inventories as the security. So he needs to see whether there are any quarterly or monthly reporting requirements. If yes, then what records have been submitted to the financial statements, whether they are in line with what is there in the financial statements or not, and based on his understanding. So all these details is something which he needs to report in his CARA reporting. So this was all which I have to cover here. So now I'll pass on the mic to Katie, who will talk more about the manufacturing sector. And if anyone has any questions, that is something which we can take towards the end of the session. Yeah, over to you, Katie.
So firstly, I would like to thank ASB as well as ICAI to provide me with this opportunity to be a speaker on this webinar. And I'd also like to thank Anil ji, Lakshya ji, and Saurabh ji for the wonderful introduction and welcome. So thanks a lot. I'll quickly share my screen. Let me know when you guys can see the screen, please.
Yes, it is visible.
Thank you so much. Okay. So I think Lakshya and Mukul already covered a lot about audit consideration for manufacturing industry. And when we talk about manufacturing industry, the first thing that comes to our mind is there are a lot of sectors or a lot of business that are being covered in this manufacturing industry. So if we talk about agenda, we'll be talking about the overview. We'll take an overview of manufacturing industry, followed by key fraud risks that exist in manufacturing industry clients, technology evaluation and its impact on audit, and what are the basic audit procedures that we follow, which is explicitly covered by Mukul, but we'll speak shortly about it. Firstly, we'll talk about overview of manufacturing industry. So as I already told, there is a vast range of businesses that are covered in it, which includes clothing and textile, petroleum, electronic, food production, metal manufacturing, wood, leather, and paper, etc. So there is a wide range of businesses. Some of them are small scale, some are large. Some of them uses very traditional production techniques, and the others use more intensive technology. So on the basis of that, it becomes really very imperative for the auditors to kind of ensure that we are customizing our audit procedures to be able to take into consideration all of these factors. As already mentioned that at global level, manufacturing industry contribute approximately 16 to 17% of to our GDP, and in India it's around 13%. And manufacturing industry is ever-growing industry, and the expectation is that in upcoming years between 24 to 2029, there is expectation that there will be a compound annual growth rate of around 3.24 as far as manufacturing industry is concerned. And hence, it is ever growing, and the one wherein auditor need to be really very cognizant of the various factors. The second thing here is importance of auditing in manufacturing industry. So as we all know that as far as manufacturing industries are concerned, there are a lot of factors that give rise to the importance of auditing and the need of auditor for that particular industry. There are a lot of regulatory compliances. There are a lot of laws that are applicable on manufacturing industry, be it labor law, be it Companies Act, be it Factory Act. There are a lot of acts that are available, applicable. There are a lot of laws that are applicable for this particular industry, and hence it's really very important that they are performing the compliance audit. Moving on, the other factors that give rise to the requirement of audit is quality of the production that takes place or manufacturing that is being done, operational efficiency to ensure that the manufacturing operations are being are operating effectively and efficiently, and the resources are being used at their optimum. There are reduced wastes, which will help in keeping the environment safe. So for those, I think there is one more. Moving on, it's risk management. So in audits, it's really very important that we identify and mitigate the risks, because as we have already covered, that there are a lot of areas in manufacturing industry where there is risk that lies, whether it's equipment failure, supply chain disruptions, safety hazards, etc. So risk management is also one of the aspects that needs to be taken care of. And then there are other factors like financial accuracy, internal controls, environment and safety compliances, which we need to take into consideration when we are auditing for a manufacturing industry. And this is the reason why it becomes very important for an auditor, as well as the audit of manufacturing industry. These are the various type of audits that a particular manufacturing industry can have. And for example, Toyota, I think they have adopted a particular principle in which there will be regular audits and continuous improvement because of those audits. And because of that, there is firstly, there are high quality standards that they are able to maintain, and secondly, there is reduced wastes and increased efficiency, and they are able to use the resources to the optimum. Similarly, ISO 9001 certification, it requires that there are regular internal and
Sorry,
external
Kirti ji, to disturb you in between, but if you are moving your slides, we can only see overview slide right now.
Yeah, I'm not. That's the slide I'm talking about right now.
Okay.
Thanks, Laksh. So I was talking about the certification that is required. So for that, there are a lot of internal and external audits that are required to be done on manufacturing clients' perspective, because for certification, it is required that there is continuous improvement in quality, and hence the audit is really very important. The third part in this slide is unique challenges in manufacturing sector. So when I was covering about the importance of audit, there were a lot of factors that we talked about, and the same are the factors that are kind of unique challenges in manufacturing sector. For example, regulatory complexity. As I told, there are a lot of laws that are applicable on manufacturing industry, because of which it becomes really very important that auditor is aware of all of those laws and to ensure that they are in line with those laws. There could be diverse manufacturing processes, as in The manufacturing site could be on multiple locations, along with the warehouses, which could be on multiple locations. There are different laws, different IT system that that particular location might have, which leads to a very diverse manufacturing processes. And hence it's really very important that we have knowledge of these wide range of processes, diverse processes, to be able to effectively carry on our audit procedures. Moving on, other unique challenges are supply chain management, technological integration, quality controls, data management, environmental and safety compliances, and financial integrity. So when we are performing audits, we need to ensure that we are taking into account all of these challenges, ensuring that there is appropriate quality control, there is appropriate environmental and safety compliances in place. There are proper data management. If there is an IT system that's in place to ensure that the data is managed properly, we need to ensure that we have good knowledge about those IT processes for that particular client. So on the basis of the overview and on the basis of the unique challenges, it's really very obvious that we have to customize our audit procedures for each and every client, even within the manufacturing industry. And hence, because of the diversified nature of manufacturing industry, the audit of manufacturing industry is all the more important and unique as well. So the next topic that we'll be talking about is about the key fraud risk factors that exist in a manufacturing industry. A lot of them are even generic, which exist in any industry, but specifically for manufacturing industry, these are the ones. And again, this is not a very exclusive list. There are a lot of others that are also applicable. And so the first one out of it is inventory misstatement, or inventory threat or misappropriation. So inventory is one of the very significant aspect of manufacturing industry, and there are various stages in which there is a possibility that inventory theft might take place, right from raw material to finished goods. It could be employee who are stealing the products. It could be the vendor who is not providing the quality of the product as was expected or agreed upon. So since inventory is really very important for manufacturing, it becomes imperative to ensure that we are taking into consideration the frauds that might exist because of inventory. For example, let's say there is this ABC industry wherein the employees were systematically stealing the high value items, and they were altering the inventory records to cover up the theft because they had the authority to make the changes in the system as far as inventory records are concerned. So it's really very important that the company also implements very strict inventory controls, and along with that, we as auditor need to ensure that we are taking into consideration these factors when we are actually performing the control testing for inventory. The other thing that might exist is procurement fraud. Again, it's related to inventory, but it's a separate fraud in itself, because there are a lot of manipulations that can be made as far as purchasing process is concerned. Some of the examples are kickbacks, bid rigging, inflating. So if we talk about kickbacks, it's usually bribing the seller to pay a portion of the sales proceed to the buyer in order to secure a particular deal. So the seller may, provide bribe to the person who is in charge of, say, finalizing the deal. So this is called kickbacks. Then it could be, the other one could be bid rigging, wherein the different bidding parties for a particular raw material is colluding amongst themselves, and then they are predetermining the winner of the bidding process. So this whole process is called bid rigging, and it kind of hampers the competitiveness that exists in the market. It hampers it leads to the higher prices and reduced quality of the product, because there is of course a monopoly. One particular person decides that, okay, this one is the party that is going to win the bid. So that kind of hampers. The other thing is inflating invoices, as in increasing, for example, increasing the quantity in a particular bill, wherein we are selling, let's say, just when a vendor kind of bills for 100 units of product, but eventually only delivers kind of 80 items. So that is called inflating invoices. So these are some of the factors that could lead to a fraud in procurement process. Then there could be vendor fraud, as I mentioned earlier, along with inventory and procurement. Then the other frauds that might exist are falsification of financials, misappropriation of funds, which are generic fraud risks that exist in any industry or business. So the management is in a position to kind of falsify the financials or provide the information that is not correct. The management is also in the position to kind of misappropriate the funds. So these are the basic fraud that further exists. Moving on, quality control fraud. So quality control fraud occurs when products are certified as meeting standards, despite not being tested properly. So we have come across such cases in our real life as well, wherein the products are not up to mark, and they are not tested properly. However, they are still certified as clinically proven or stuff like that. So these kind of frauds also exist. So we need to be cognizant of the fact that no such quality related frauds exist in the particular organization. Moving on, there is this payroll fraud, wherein the fictitious employees are being paid wages, or the ghost employees, as we call them, are being paid, wherein there is no such employee that exists. So these are payroll fraud that are encountered in not one but many of the businesses or the organizations. The next one is intellectual property theft. So this kind of includes the unauthorized use of the trade secrets or proprietary process or product design of a particular business. There are a lot of instances where a particular employee or a person at the higher level kind of have access to these proprietary processes and product designs, and they kind of work with the other businesses to provide those information to the competitive business. And this kind of hampers the business a lot. So this is the intellectual property theft that exists. And one of the most important theft, bribery and corruption. I don't really think that I have to explain a lot about it. Bribery and corruption is kind of really very it's kind of a problem that exists in an organization or a business, and we need to ensure that if we come across such instances, we kind of report it to the management. And the last one is cyber fraud. Again, along with the growing technology that is being used in an organization, be it manufacturing or be it the software that we use for accounting or other purposes in the organization for record keeping or bookkeeping, there is cyber fraud that is increasing because of that, and there is a huge risk, which could be in form of hacking or phishing attacks or ransomwares. And there are a lot of mails that we receive from various sources, wherein there are links which when used can lead to hacking or phishing. So yeah, that's one more fraud that exists. And since manufacturing industry is somewhere which is highly driven by technology, this particular risk is increased all the more. So on the basis of all of these frauds and the examples that we talked about, we need to ensure that when we are performing our audits, we are kind of skeptical of, professionally skeptical to ask the questions about the processes and about the controls that exist in the organization, to ensure that such fraudulent activities do not take place. Um, Moving on, next we'll talk about the impact of technology and software changes on the manufacturing industry clients. As you know, technology is ever evolving, um, and it is still um, evolving. It is still growing. So manufacturers should always continue to embrace the digital transformation to contribute to the competitive and um, ever-growing manufacturing market, and to be resilient in the future and to keep tackling the ongoing manufacturing challenges. Along with that, since there is change in technology and software in manufacturing industry, it becomes very important that we kind of ensure to include it in our audit processes as well, because all of these changes significantly impact the nature, timing, extent of the audit processes, the customization that are required to be made for such audit processes. So yeah, some of the examples of um, the changes are, first is advanced manufacturing technologies. So as you all know, the integrations of IoT, AI, and robotics in manufacturing processes, it creates vast amount of data and automates many functions. So the few things that auditor need to take into consideration when they are looking into it is that they should ensure that the data that is being generated by these technologies are accurate, and they should also check the integrity of the data. The auditor need to have a very deep understanding of these technologies to assess their implementation and operations. And the risk, they also need to understand the risk that might be associated with it, because um, data breaches and some failures are something which are inevitable, and it kind of become very crucial um, when the technology come into the play. The other area that we need to take into consideration is cybersecurity. So increased connectivity and reliance on digital system, it kind of heightens the cybersecurity risk, as we just talked about the cyber risk. So we need to ensure that the protocol that are in place for cybersecurity are correct, and it's responsive. So if there is any instance wherein there is an incident or a particular issue that has been raised because in the cybersecurity, the time in which they are being responded is quick, so that it do not hamper the cybersecurity. We as the auditor need to ensure that the cybersecurity is in compliance with the regulation and standards of cybersecurity law. The next is cloud computing, one of the example of technology evolution. There are a lot of applications that we utilize in the different industry, including manufacturing industry, which is based on cloud computing system, wherein the data is being stored and which is kind of available for everyone who have access to such cloud computing on a real-time basis. So we need to ensure that we need to ensure that the security measures that are being implemented by these cloud service providers are appropriate and they are in place. We need to ensure that the access, that is the people, the set of people who are being provided access are actually eligible for that, and the sensitive data is being protected, which exists in this cloud based system. In order to ensure that they have proper access controls, as a part of our internal control testing or GITC control testing, we need to ensure that only the person who are authorized have access to such data system. Big data and data analytics. So this is something that is eligible for manufacturing industry as well as for audit as well, because performing various analytics from the data that is available for the client, it becomes really very easy to kind of decide or design the audit procedures, the extent to which we need to perform such audit procedures, and the comfort that we can get from such audit procedures on the financial data of particular client. So what do we do when the technology is evolving at such a great pace, and it is impacting audit in various ways? So what is it that we as an auditor need to do? So some of the overall key considerations that I think we have covered in one or the other point just before this, that the auditor should take into considerations are continuous learning and adaptation. So since there is a change in technology, there could be change in the software that the manufacturing client is using. There could be change in the software that even we as auditors are using. So the one thing that we need to ensure is that there is continuous learning, and we are able to adapt the changes that exists. We understand how the process flows because of the change in technology or the software, and if required, we need to acquire the relevant skills or the expertise for that particular technology. So learning is something which is a continuous process, and there is always a scope for improvement and learning. So that is something that we should always keep in mind, and also adapt to the ever changing technology that exists in the manufacturing industry. Robust internal controls, ensuring that internal controls are updated to address new risks posed by the advanced technologies. So when we are in planning stage, we kind of understand what's the IT environment, what's the control environment of the organization. And during that process, it's very important that we also get an understanding of the change in technology and how it is impacting the entire business process. And on the basis of that process and understanding, we need to go ahead and perform robust internal control testing to ensure that the changes is actually taken care of, and we are testing the internal control as required. Collaboration with IT experts. Since we are talking about GITCs, we are eventually auditors, so there are a lot of technological things that might not be our area of expertise. We might acquire the relevant skills, but still, if there is IT professionals who we can kind of rope in to work closely with us to get a better comfort over the IT environment of a particular organization, which might help our audit procedures, I think that is something that we should go ahead and do. Of course, we need to gain a little comfort over the work that is being performed by someone else, and if we are planning on relying on it. But this is one of the things that obviously the auditors can do to collaborate with the other experts. Compliance and regulations, keeping abreast of evolving regulation and standards related to technology and data security. So along with gaining knowledge about the technology, the way it works, the process, how it flows, we also need to ensure that we are aware about the regulations and standards that are related to that technology, and ensure that the technology is in fact in compliance with those required standards. And lastly is risk management, of course, identifying and mitigating risk associated with technology use in manufacturing processes. So if there is a new technology that exists in for a particular manufacturing industry, um, we need to ensure that we also take into consideration what are the risks that are associated with the technology, and also work on how we can mitigate those risks, and also ensure that we are testing that actually the control is doing what is needed to be done by that particular control. So we need to ensure that uh, we are performing the risk management processes. So one last point that I wanted to bring up as far as technology evolution is concerned, is also the IP and IUC testings. So IP is information provided by entity, and IUC is information used in control testing. Since this is a new technology or new software that exists in an organization, we need to ensure that the reports that are being extracted from that particular technology or software are accurate, are complete, because these are the reports that we'll be using in our entire audit process. So be it IPs that we are going to use in our substantive procedures, or IUCs that we are going to use in our control testing, we need to ensure that we are also checking the parameters on the basis of which the reports are being extracted, or the report logic that is being entered to be able to extract that particular report, and ensure that it is accurate and complete, and is sufficient and appropriate for us to be for us to utilize it in our audit process. Also, along with we being adaptive to the continuous change in technology, we also need to ensure that the client is also continuously learning and adapting the changes that exist. We need to ensure that the person who is actually in charge of that particular technology or software is actually competent enough to be able to use that technology, or to be able to use that software to the optimum possible. Um, because as you know that when we are performing control testing, one of the important factor is the person who is actually the control owner is competent enough to use it. Because when we are using a particular software, we are used to work with that particular software. For us to be able to change basic human nature, it's really very difficult. So we need to ensure that along with us, we are also cognizant of the fact that the person who is actually responsible from client side as well is adaptive, and is able to embrace the changes that exist in the technology. So audit procedures, I think Mukul already briefly touched upon these factors, and also took this into consideration when they were going through the inventory and other financial statement line items that were being discussed. But we'll also discuss a little bit about each of the stages of the audit. So the first one is planning the audit. So in the planning stage, planning stage is kind of really important, because on the basis of that, it kind of lays the foundation of how the audit is going to flow for the rest of the period, or for rest of the stages. Firstly, we need to understand the client business. It's really important that we understand the nature of business, the volume or extensiveness of the business, the complexities of the business, the diversified nature of the business, um, its operational aspects, its control environment. These are the factors that we need to take into consideration, because on the basis of that, as I just mentioned, if there is a change in technology, we'll have to take into consideration that particular point. We need to take that into consideration when we are understanding the business, when we are understanding the control environment, and also when we are deciding what would be the overall risk of the organization as well as of the different financial statement line items. So planning is kind of really very important. First thing that we do is we understand the client's business, whether it's operational insights, is customized approach, or regulatory compliances, because all of this is going to help. How are we going to design our audit procedures? The second important thing that is being done at planning stage is identifying risk. We need to ensure that we understand the business properly so that we are able to identify the risks that might exist in a particular business. As far as manufacturing is concerned, some of the basic risk area that are presumed sort of are inventory management, cost accounting, revenue recognition, procurement and expenditure, and technology integration. And I think we have talked about all of them previously. One most important thing that we also do at planning stage is we determine the materiality, which is really very important for audit. For manufacturing industry, usually the benchmark that exists is revenue, because revenue is something on the basis of which we decide the operations as well as how the business is doing for a manufacturing industry. So mostly it's revenue, and it could be profit before tax as well. Yeah. So the next, moving on with the planning, the next thing that we do is conducting the audit, which is kind of performing the substantive procedures and internal control testing. So if we talk about firstly internal control testing, so internal control testing is something that's really very important, because as we have discussed in the previous slides about the risks that exist, be it fraud risk or the normal inherent risk that exists in the business or manufacturing industry, it becomes really important that we perform internal control testing to ensure that the risks that exist are also being mitigated, and the financial statement portrays the true and fair picture of how the business is doing. Because on the basis of financial statement, there are a lot of decisions that are being made by the users of the financial statement, and we as the auditor need to ensure that the information that is being passed on to the users of the financial statement is correct and appropriate. So control testing, we need to ensure that whether the controls are designed and implemented properly and whether they are operating effectively. And if the controls are in place, it really helps to ensure that the substantive procedures can be designed in a way that we can leverage the comfort that we have received from control testing. So in order to do control testing, we need to understand the control environment, control activity, how the information and communication is being recorded and passed on, data integrity, and also monitoring the technology and the control that are in place. Once we are done with control testing, we move on to the substantive procedures, and the same includes of two types. One is analytical procedures and the other one is test of control. First one is analytical procedures, and I think it's really very important in the manufacturing industry. As far as in analytical procedures are concerned, it's really important to kind of understand what's the driving factor or what is the driver that leads to the change in a particular FSLI. So I think we just talked about it in this session that, for example, BOM, bill of material, we need to ensure that we are comparing it with the prior year and we are checking whether the change in valuation of inventory is, or the recording of COGS is because of change in quantity or change in price. Because either there is a change in quantity or there is a change in price, which has led to the change in COGS. So quantity and prices are kind of drivers to verify the change in cost of goods sold. Similarly, if we take an example of electricity, which is one of the most consumed or very important item as far as manufacturing industry is concerned. So if we talk about power, if there is expense related to power in prior year and we compare it with the current year, if there is change in it, first could be the reason could be there is increase or decrease in the quantity that is being produced using that, consuming that power, or there could be change in the um, price at which the power is being consumed and is being evaluated. And the only other factor that could lead to the change in power, if there is no change in quantity and price, is the inefficiency on our part, because of which there is increase in power expense. So in that case, if third criteria is something because of which there is a change, so then we'll have to go back to the management, have discussion, understand what is the problem because of which there is such increase or decrease in usage of power. So it's really, really important to understand what are the drivers, and on the basis of that, analytical procedures kind of become really very easy. And once we have these analysis, it provides a lot of insights, which also helps you to perform or not perform uh, the substantive like test of details to whatever extent. So if we are able to get more insights, and if the changes or the trends are in line with our understanding of business, I think I'll go ahead and perform less test of details. And if vice versa, I'll have to perform more test of detail to get more comfort over that particular area. So analytical procedures are really, really important. Then moving on to substantive testing, which is test of details. So as we already discussed, some of the very important areas that we need to take care of when we are performing substantive testing are inventory and cost of goods sold, because it's a manufacturing industry, and of course revenue. Other than that, there are other FSLIs like PPE and its impairment. The one other important area that is really, really important in manufacturing industry is warranty. So even that is something that we need to ensure is correctly recorded, because since it is a manufacturing industry, warranty is something that go hand in hand with most of the products. Warranty is something wherein we provide a uh, option to the client, to the customers, that if there is any problem with the product that is being sold, or if the product is not working in the way that it is supposed to work, or if there is a defect or any such sort of thing, then there is option to replace that particular product or to kind of repair that particular product. So in both the cases, warranty will lead to a particular cost, be it replacement cost or be it uh, repair uh, repairing cost. So warranty are of two types. One is assurance based warranty, and the other one is service type warranty. So in assurance type warranty, there is this particular warranty which is tagged along with the product, and it is and whether the particular customer opts for that particular warranty or not, it is not going to change the price of that particular product. So those type of warranties, for example, if I have bought a particular TV and it says that it will have a warranty of 2 years, whether I take that particular warranty or not, the price of that TV is not going to change for me. Those type of warranties are called assurance type warranties. And the other type of warranty is wherein the dealer is also providing me with 3 years of extended warranty. If I take that particular warranty, the price of the TV is of course going to change. Those type of warranties which are optional are called service type of warranties. Now, the treatment of both these warranties are different for manufacturing industry. For assurance type warranty, we kind of create a provision on the basis of historical data and record the same as required by Ind AS in our books of accounts as a liability, as a provision. And the other one, which is service type warranty, the same for the same, we kind of recognize it along with revenue as per Ind AS 115, wherein the warranty is being recorded in our books of account and is being deferred over the period of time of that particular warranty. So if the warranty is for 3 years, the revenue will be deferred for 3 years and it will be recorded accordingly. So as such, we really need to understand when we are performing our revenue testing. Along with revenue recognition, we also need to understand that the warranty is recognized correctly and appropriately as per required standards. And for that, it's really important that we review the agreements properly to understand the type of warranty that is attached to that particular product and whether or not we are kind of recording it on the basis of that particular type of warranty. So yeah, I really quickly wanted to kind of touch on this particular topic because warranty is really important as far as manufacturing industry is concerned, along with revenue, and hence I thought of kind of taking that into consideration along with substantive testing. So moving on, reporting the findings. So obviously, one of the results of audit is that we might come across some gaps on how the financial statements are being prepared or how the numbers or the amounts are being recorded in our books of accounts. There might be some gaps, and we need to ensure that we are reaching out to the management proactively and in timely manner to let them know that these are the findings or misstatements that exist and that we came across during our course of audit. And we need to discuss with them the same and ensure that they are being corrected. And if not, they are being appropriately disclosed in our audit report. So communicating the finding with the management is really very important. And then it's really very important that we prepare a very comprehensive audit report, which kind of includes all of the documentation of finding, how we came up to that particular decision that we are providing in our audit as our opinion, and whether we are compliant with the regulatory requirements or not. So yeah, I mean, reporting the finding is of course the most important and the concluding stage of our audit. So yeah, that was it from my end. Thank you so much.
Thank you, Kirti. Thank you so much for giving your brief knowledge about it. And also, you have covered mostly all of the area like involvement of IT and the reporting requirements. What are the key consideration on audit of manufacturing? So, thank you so much. And further, we have some questions. So, I will ask one by one. So for the first question how does the manufacturing audit process can be improved supplier relations? That would be great if you or Mukul can answer anyone.
Um, I don't think Mukul is
Okay, yeah,
here,
please
but
repeat.
can you please repeat the question? Sorry.
Yeah, how does the manufacturing audit processes improve supplier relations?
How does manufacturing
Audit
processes
process,
improve
yeah.
supplier relations?
Yeah, like if some supplier is using the like financial, your credit worthiness, it can also impact your assessment. On the basis of supplier will be willing to give you more credit options, like the way I'm asking.
Okay, so how can we improve our supplier relations is what
Yes,
you're asking. Okay.
yes.
Um, so the first thing is, I think we supplier relations. I feel like we need to firstly be very cognizant of the entire process. Like we are providing all of the detail to them in proper manner, and the right from the start till end of the process. If we are committing a particular thing, we are adhering to that particular commitment. If we are able to do that, I think we will be able to kind of build a good relationship with the supplier, because first and the foremost thing is to be, for any relationship, is to be able to communicate properly, and then to be able to kind of deliver what is being committed. So if we are in line with what the supplier expects out of us, I think he will be in line with what we expect out of him, and that way I think it's kind of a two-way thing as far as relation is concerned, and we need to ensure that we are doing our end of things, and he'll automatically do what's required to build the
Okay.
relationship.
Okay, thank you. And one more question, like on warranty part, you have explained the warranty very well. So, can you please more elaborate, like suppose one organization, how they recognize the liability for the warranty? They are no, they have they have not that much estimates, but they are thinking they are in. Suppose they are manufacturing the washing machine and they're supposed to uh, incur some liability in future due to some defects, warranty defect that would be covered in warranty defect. So how the estimates would be measured, how that should be recognized in the financial statement? Is there any requirement of the quality standards which have to be also fulfilled?
So as I already told, warranty are of two types. One of them is assurance type warranty, which is kind of already attached with the product. It is being provided to the customer irrespective. So those warranty are something that is being recorded as a provision, as our liability on the basis of historical data. So we go back in the previous year, we take a look at the warranty that we might have provided earlier, that have been claimed earlier, and on the basis of which we'll get an idea of what's the usual amount that is being taken into consideration for such kind of warranty, and we kind of uh, base our provision on the basis of that particular assurance type. As far as the other type is concerned, which is service type warranty. So in service type warranty, so there is this comes along with AS 115. So we kind of understand what's the performance obligation as far as warranty is concerned, and on the basis of that, we go ahead and record our revenue part of warranty in our books of accounts.
Okay. Okay, thank you. And in what ways can a manufacturing audit can improve the efficiency within the production processes? If you can explain it more in detail.
So as I already told, one of the most important thing for bringing in efficiency is embracing the technology that exists in today's world. It's really important that we kind of take into consideration the technology which is applicable for a particular business in a manufacturing industry, and kind of embrace it and um, adapt it and use that for manufacturing processes, and if we are able to do that, I think that is going to bring a lot of efficiency.
Yeah.
Further, I think we also need to take into consideration that we are managing the resources, be it the employees, laborers, or the resources that we use for manufacturing, that are being utilized to the optimum and reduce the wastage as much as possible. So that would also lead to the efficiency as far as manufacturing industry is concerned.
Okay.
And
Okay. Thank you so much.
just to add to what Katie said, in terms of technology, what I have seen in the manufacturing sector these days, they are using the AI. And for example, in a store where there are large warehouses and inventory is kept at very distant locations within that warehouse, they are using the robotic what you call cranes, and
Yeah.
they just enter within the computer, and then crane brings the material from that store location to the floor. So that kind of technology they are using. This way they are reducing the time which is required in the production process. So that is one of the example. So the technology is the key thing with which there can be a reduction and reduction in the time, and they can bring more efficiencies in the production process.
Yeah. Thank
But
you.
this efficiency is only fruitful when we also take into consideration the risk and we ensure that we have appropriate control in place. Otherwise, only efficiency is not going to help.
Yeah.
Thank you. Yeah, over to you, Laksh, if you have any questions.
Thank you, Saurabh. So Mukulji, you discussed about the inventory and the costing. So I just have one question around first on the physical inventory count. So you talked about the rule forward procedures, not rule forward procedure, but rule forward when we perform it. So I just came across one situation, a hypothetical situation. Let's suppose that if the company, because it's a management's responsibility to conduct the physical verification, and the management was not able to conduct the physical verification at year end, be it 31st December or 31st March, as the case may be, depending on the geographies. So, how can we align our substantive procedures or our to check our the physical to check our procedures around the physical verification from rollback perspective as well? So you mentioned there is a rollback procedures are also there. So what are these rollback procedures?
So rollback is something. So there are two options which are there with the auditor. One, if management is not able to perform the physical count, then in that case, auditor can also perform an independent count. So he can align with the management and say that he wants to perform the independent count, and there would be samples which he'll be selecting out of the year-end inventory or any other dates inventory where he'll perform the procedures. Second is if management performs the physical count after the year end. For example, the year end is 31st March, and if the physical count is performed on, say, 15th of April, then in that case, management will have to perform the reconciliation of inventory balance from 15th April till 31st March. That is called rollback. So that would contain what is the inventory quantities in inventory by inventory, what are the quantities, then what is the movement, inward and outward movement between 31st March and 15th April, and then the balance of inventory quantities as of 31st March would be derived. So within that, what auditor will do, he'll obtain that reconciliation from management, then he'll select certain samples out of that movement. And because he has observed that inventory count on 15th April, so he has a comfort on those quantities. On the movement, he'll select samples, then he'll obtain the comfort, and that way he'll come back to the inventory quantities as of 31st March.
So is it appropriate to say if the auditor has an option of getting with the procedures around rollback and roll forward? So rollback would be the more appropriate procedure to perform when checking the existence position.
I won't say that. It depends on the type of the industry and volume of the inventory. So for me, why some entities prefer rollback, why some entities prefer roll forward, because it is based on the availability of their people as well as capacity of their department as to when they can conduct the physical count. So most of the entities generally perform before the year end, and I have rarely seen entities performing the rollback because after the year end, they are generally stuck with their all financial operations, audits, and other things. So generally, they prefer to perform the roll forward.
That's thank you. The last question on the standard costing part. So when we are when we are planning, so we are setting up our nature, timing, and extent of the basically the price testing in our inventory models. So let's suppose if a manufacturing concern is following the standard costing method, and there are few external factors are there. For example, labor strike is there, or maybe if we talk about the developing nations like India, so the prices of the diesel or prices of the transportation fluctuates very highly. So how does an auditor should include all these factors in its assessment of nature, timing, and extent?
So that is what I mentioned in the price factor analysis, that he needs to understand the entity and its environment. And when the auditor is obtaining the understanding of the entity, he'll understand what are the regulatory environment and what are the operational environment. For example, as you said, the strikes are there. So he'll have to understand the history, like where there have been many strikes and whether that is something which is normal as compared to the entity's operations. Generally, strike is considered to be abnormal, and if there are any extra wages which are required to be paid, so generally it is not considered to be a normal cost which is to be loaded to the inventory cost. And another example, as you said, the price fluctuation in diesels and other fuels. So that is something which uh, again would be covered as a part of understanding of the entity and environment. So once auditor has understood all these factors, then he'll factor in his audit approach. He'll develop his expectations. He'll say, yes, this is the expectation, and because of such fluctuations, there would be an increase in the inventory cost for that particular item as compared to the previous year. So that way, he will have a comfort that yes, this movement was something which was expected in the price of the inventory. So he'll be more comfortable, and then accordingly he'll design his audit procedures.
Okay. I think we are done with all our questions. Thank you to Kirti ji and Mukul ji. Over to you, Anil sir. Thank you.
Thank you so much, Mukulji and Kirti madam, for such a wonderful deliberation. You have covered all the aspects relating to this manufacturing sector and covered almost various intricacies while auditing this particular sector. So, on behalf of Auditing and Assurance Standard Board of Institute of Chartered Accountant of India, we heartily extend our thanks towards both the learned speaker, Madam Kirti ji and Mukul Bindal ji. And special thanks to both the moderators for wonderfully moderated today's webinar and coordinated throughout the session, and wonderfully handled this question answer session also. So thank you so much once again, Madam Kirti ji, Mukul ji, Lakshay ji, and Saurabh ji. Thank you so much. I also extend heartiest thanks to various participants of today's webinar also. Thank you so much. Good evening.
Thank you.
Namaste.
Thank you.
Thank you.
Thank you. Thank you. Thank you.